Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. This is silver on a daily scale priced in US dollars. I was telling you we are coming close to a point we're going to face some correction. The wave count that I have in silver is supportive of the interpretation that we are now in a fourth wave. You can see the upsloping channel, and you can see that everything that we have here is still supportive very much of the bullish case. This is the 200 moving average, that's the 21, and that's the 50. The correction, in my opinion, is definitely not over. Definitely not over. In a good case, we are very close to the end of this first leg, if you like, of this correction, and this correction appears to take the shape of a fairly complex pattern, I think, and I would not be surprised if we hang around here for as much as 1 month. Okay, that will be the ideal scenario in terms of the wave count for silver, that being 1 2 1 2, and then that's 3. 1 2 3 4 5 3 on the red scale. Fourth wave should not surprise you if it pulls the market towards 0.382. Perfectly standard stuff. Getting some support from the 200 moving average right here, yes, coinciding with this level, and just becoming, if you like, uneventful market, yes, for a while to cool off a bit before it continues higher. Obviously we have to consider other options. The most negative option would be a solid break of this level at 1674, and then it will force our hands to consider, if you like, a very bearish scenario, which I at this point in time do not consider very likely. That will be on a break of 15.85. okay, we are breaking 15.85. we would have to consider the possibility that this is an ABC, which means that this could become reality in the case of silver. Again, I have to emphasize that this is, as far as I'm concerned, very far from what I see currently as a realistic option. However, you will have a few stops on the way that we're going to have to watch very carefully. We have the support here. Okay, I would expect this level to hold should it come down to correct that low. And any bounce back to 17.75, 18 should reassure the bulls that everything is on track. Even if we spend here about 3 or 4 weeks, that's fine, that's normal. Okay, let's jump now to the 60 minutes and let's have a look what we can tell by the structure on the more detailed scale. We came up from here where I suspected the fourth wave ended. I took this as 1-2, running up I took this as 3-4. I think we experienced a tiny failure fifth here. And then we start counting for the correction. We had 1-2, 3-4, 5, and I think I can put my finger here on a triangle, which is an A, B, C, D, E. If that's correct, my B ended here. I have an A, I have a B, I have 1-2, it came down in a 3. I think that it tried to come back. Not sure that it's going to continue straight away with a run to higher grounds. I think there is quite likely another leg coming down towards 17. And that would look great in terms of delivering my ABC, okay? And at that point, around 17, 16.9, I would definitely expect support to come in. Now, if my interpretation is correct here, that this is an A and that's a B, what we are going to see here is a completion of the C, then a rebound back towards 17.6, 17.7, having delivered this tiny move down, should be a fairly strong indication that the bulls are in control. Do you see? Going up there above 17.7, having come down just a bit. If it goes straight up, all the better. Yeah, all the better. There is one more interpretation that I would like to introduce here. I'm not terribly keen on this interpretation, but it is something that appears to be possible in a few gold and silver stocks, so I might as well share that idea with you. You see, that is 1-2 unchanged. That will be a 3, or a 3 ending here. That in fact will be a 4, and that will be a 5. You're with me? 1, 2, 3, 4, 5. That's very important. That's very important, because if this is indeed 5-wave run, that's how it should be taken, then it means that the rebound here could be a B or a second wave. Yes, and that means that once it records the bottom of this movement, if it comes back to re-challenge and press hard through that, it could actually go down by quite a chunk. Okay, so it is very important to be aware of this possibility. Again, I don't think it's very likely, and we're going to see the chart of gold in a sec. The chart of gold is basically a bunch of ABCs that the entire price action there is corrective. So I don't think we should get carried away with a bearish reading where some would jump and say, hey, this is 1, this is 2. After you slight jump here, it's going to crash in the third wave. It's absolutely going to collapse. No, I wouldn't run with this idea at this point. I'm just warning you of this option and what it has to do to become, if you like, to be taken as first interpretation. Yes, to take it very, very seriously. But right now, I think it should be put on the back burner. Let's have a look here at gold. That is the weekly scale of gold price in US dollars. We are assuming that the rally up to this spot registered 1. There is, of course, another interpretation that is essentially not going to change much the bullish outlook for gold, and I still think that gold is really in a bullish situation. Now, you know, we could debate whether first wave ended here or here, and we could have all of this as a second wave. Yes, and this is the first wave. And as you clearly see, there is divergent interpretation here from what we have seen in the case of silver, because here I'm talking about a 1, 2, 3, 4, 5, so I'm assuming we have actually a first wave complete. That first wave would be the first wave of the third wave of gold if gold indeed ended a major correction right here. The case for gold breaking back to 1,450, 1,400 is not, I would say this is something that has to be considered, but I wouldn't rate it now as a high probability. No, I don't think that we should rate this as a high probability at this point. I would begin to think that, yeah, there might be something to that if it begins to break through that. This is the zone of about 1,600, 1,615. Okay, breaking through that, getting a weekly close down here. Yeah, there could be something building up here for a crash towards 1425. But right now, what I see here, in fact, is urging me to reconsider the possible set of interpretation that I've adopted since the bottom here. I have no issue with this being 1, 2, 3, 4, 5 on the daily. Okay, that there is clearly a triangle here. The only question is, you can see that I have treated this as a 1, 2, 3, 4, 5. It is quite possible what I might have to do, I might have to go back and say the previous move ended here, and that is not a 4, 5, but that is a 1, 2. So if that is the case, look what will happen. If that's your 1, 2, that's going to be your 3, and that's going to be your 4. So in fact, you're going into another sideways price action where you will see gold building a base to go even higher in the fifth leg. This kind of structure would fit what we are seeing in silver at this point, but I don't think we should try to squeeze gold to sort of force it to go into the same pattern. No, we should in fact work with what seems to be appropriate for gold at this point. And should we get further signs that no, wait a minute, we have to go in this direction of the triangle, so be it. We adopt that yes, that line of analysis. Let me show you now the 60 minutes, and you will see why I think that essentially what we have seen up to now is really a bunch of ABCs here. In the case of gold, that's an A, that's a B, that's a C. Seems to me very clear. I don't see why I should doubt it. Okay, at this point in time, it looks to me very clear. I'll go with that. That's an A, that's a B, that's a C. Fine. Coming down, I have another one. A, that could be my B. It's going down for a C. That appears to me okay. So in fact, what I'm saying is that this is an ABC, and this is an ABC that could be taken as an X. So you got another ABC actually unfolding here. And the very last ABC does not look to me to be complete. If my B ended here, and take a look how I subdivide it, I have an A. Okay, my first A terminated here. And then I have a tiny ABC, I have an ABC, so I have an A, I have a B, I have a C, I have a D, I have an E, right here. Okay. That's one way of interpreting. It can also be that, in fact, it ended here. It's not going to make a huge difference. The thing is, if gold presents some weakness early in the week and it goes and it dips slightly under this level, which is 1668, it will essentially tell you that it's finishing the C, the tiny C on this level, okay? And then the key thing is to see if it's coming back. It's regaining the support of 1696. It's consolidating in this manner. Prepare for a rebound. It's going to come back towards the previous high, and over the course of the next several trading days, we will find out if we have to go down the road of the interpretation of a triangle being formed here or not. Okay, either way, even if we have behind us a bunch of ABCX ABC right here. Yes, ABCX ABC. It's coming back. No guarantee, okay, no guarantee at all. In fact, I think it's extremely unlikely that it is ready to run through 1765. Okay, I could be wrong, and it could be that gold is way stronger than I think, but I, at this point in time, do not see this as a very realistic option for the coming week. If it does, then you know that I am underestimating the strength of the bull here. So the message to take from this analysis at this point, that you should expect a very robust support to manifest here at around 1600, 1620. Ideally, if we see gold actually holding even better and not needing to break to 1650, this zone, and support is already manifesting around here, pushing it back to mid-range, all is well for the bulls. Not to worry, this is normal sideways price action that is absolutely necessary to consolidate the gains before gold is ready to carry even a lot higher. Enjoy the clip. I'm back here with some details about my service, currently at 50% off for first-time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit you know, where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you're not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.